Welcome to today's market report. European stock markets are seen edging lower on Monday amid disappointment that the region's leaders have failed to come to an agreement over additional stimulus as coronavirus case numbers continue to rise globally. At 7 o'clock this morning, London time, DAX futures contract in Germany traded 0.2% lower, FTSE 100 contract in the UK fell 0.1%, CAC 40 futures in France dropped 0.4%. European Union leaders remain deadlocked after 3 days of haggling over a plan to revive economies hard hit by the coronavirus pandemic, unable to agree on how to structure the 750 billion euros proposed for the recovery fund and what conditions to put on the countries. That said, losses are likely to be limited as leaders have agreed to return on Monday afternoon in an effort to finish the negotiations, suggesting the two sides are not too far apart. In the United States, US policymakers are set to begin debating a new aid package this week, with some existing programs to support businesses and households set to expire within weeks. The Republicans want the upcoming aid bill to cost no more than $1 trillion, while leading Democrats are seen as asking for something approaching 3 times as much. This comes with the number of coronavirus infections having climbed above 14.5 million, with over 600,000 deaths worldwide, according to data from Johns Hopkins University. The virus has claimed over 140,000 US lives in total. In corporate news, Koninklijke Philips will be in focus after the Dutch medical technology company said on Monday that net profit exceeded expectations, and it expects to return to sales growth in the second half of the year. Additionally, Intesa Sanpaolo has increased its takeover offer for smaller rival Unione di Banche Italiane, adding a cash component. Oil prices fell on Monday as the growth of coronavirus cases around the globe continued to pose a threat to the recovery in fuel demand. While fuel demand has recovered from record drop in April after countries around the world imposed strict lockdowns, usage is still below pre-pandemic levels. US crude futures this morning traded 0.6% lower at $40.49 barrel, while the Brent contract fell 0.7% to $42.84. Gold futures were flat at $1,810 per ounce. On the FX front, GBP USD drops to 125.20, down 0.37% on a day while heading into London Open on Monday. The cable's latest fall has more to do with the broad risk aversion wave than the pessimism surrounding Brexit and tussle with China, not to forget increasing odds of the BOE's negative rates. As a result, a light calendar will also be the key as it comprises comments from the BOE policymakers and the already extended EU summit. Furthermore, The Sun's news that the UK Prime Minister Boris Johnson's advisor Dominic Cummings is pressuring British negotiators to stick firmly to their red lines to get the best Brexit deal possible, and last week's signals from the BOE Governor Bailey suggesting likeliness of negative rates also lured bears. Alternatively, the UK Prime Minister Boris Johnson's refrain from recalling the lockdown struggles to defy the US dollar pullback. Amid all these catalysts, the market's risk turn remains heavy as the US 10-year Treasury yields dropped 1.1 basis points to 0.617%, whereas stocks in Asia Pacific also print mild losses. Looking forward, speeches from the BOE's holding and Tamaro could offer near-term direction. Eurodollar has started the week on a positive foot and is lifting to 114.65 to 70 band, new 3-month peaks, while Monday's 4-hour chart points to further gains. The dollar index was flat at 95.925, while dollar yen was up 0.3% at 107.27. This is today's market news. Thanks for listening. We'll see you next time.